What is up, Clove Tards? And Scott with Never Hedge back for another Cloverhealth investments update, and we got absolutely killed today, down 57 cents and 6.61%, and only down a penny though in after hours. That $8 support line is holding very strong right now. Let's take a quick peek at the RSI at the close of the day. Was down to not where we want it to be at 41.26, and MACD's looking slightly, well, they're pretty much fucking touching. Let's go over to the Ortex data. And I know we're looking at quite a few lines here and bars and all that, but I will explain what all this is in just a second. So we do have quite a few shares on loan, as we can see by this nice Timberwolf gray bar chart right here. Nice ethereal spooky ghost gray, and we are looking at 7.58 million in security lending. That means shares on loan. This nice canary yellow bar chart here is the failures to deliver, and this is from a couple of days ago. We have not been updated on the FTDs for Cloverhealth. It takes a couple of days for Ortex to be up to date. So the highest or the most recent FTDs are a little while ago. We're looking at 1.783 million FTDs on Cloverhealth. So the nice forest meadow green line here is the loan average days of the share. The average loan age is 14.21 days. The days to cover in this nice Kelly green line down to 0.67. Nice azul blue line here is the short interest. But as you can see, I mean, all this really adds up to is we are getting fucking crushed right now by those shorts. We're going to switch over to the dark pool right now. The dark pool dollar position has declined a bit from, I believe it was negative $1.3 billion in their position value. Now they have, I guess, improved their position to 994 million in the minus, and the net short dollar volume is negative 26.9 million. Some new institutional buys from today. We have Belvedere Trading LLC picking up 40,245 shares valued at $336K. And let's go over to the Fintel short interest. So short volume ratio is very high. Short interest of float is even higher at 32.01. And that short squeeze score is about the same as it was yesterday. The short shares availability has increased, I believe, from yesterday. Yesterday it was down to 2.7. Now it's up to 3.5 million. Short bar fee rate is still very low, about what it was yesterday. Now we do have a little bit of news to get to. Cloverhealth joins the NCAA for New Quality Innovation Series. The National Committee for Quality Assurance is bringing together leaders in healthcare to present the Quality Innovation Series once again. This virtual series will gather leaders who develop measures, write standards, and help shape healthcare quality in an effort to help move healthcare quality and equity forward through seminars, talks, and panels. Sessions will include NCQA leadership, health plan providers, and others sharing best practices in healthcare. The Quality Innovation Series kicked off June 17th and will continue with weekly live sessions through November 18th. Very nice for Clove. And this is something from the NCQA that we just talked about. They recently informed Clover that it is one of a small number of plans identified by CMS Office of Minority Health as demonstrating high performance on a prototype of the Medicare Advantage Health Equity Summary Score, aka HES, a newly developed measurement tool for identifying plans that do well at providing high-quality, equitable health care to beneficiaries, including groups who are disproportionately affected by social risk factors. Very nice for Cloverhealth. And then we have one more thing to get to on the warrants that we talked about yesterday. So this is a very long and very thorough DD post by Tough Ground 6524. My smooth brain struggled to get through it all, but we're going to do our best to tackle this together. All right, so here we go. What we know for certain is that there are near 38 million public warrants purchased for $3, 10 million private warrants purchased for $3, and 10 million that Chamath purchased for 1/5. Purchase price of warrants is relative in relation to whether these investors profit, which we'll be going over. Clov has decided to force all warrants to be redeemed on a cashless basis, which is a new development from yesterday that has been confirmed thanks to Danger Panda 85's efforts in receiving confirmation from Clov Investor Relations Division, meaning investors will receive a fraction of a share per warrant the investor owns based on the volume-weighted average price, aka VWAP, of the stock from 723 to 85, also referred to as the fair market value weighted by volume. For us smooth brains means that if we have 9 days of trading between 723 and 85 that have 20 million in volume with a share price of $8 and 1 day of 700 million in volume at $30, the calculation would be 1 times 700 million times 30 plus 9 times 20 million times 8 divided by 880 million. Always remember the PEMDAS rule equaling a 24.06 fair market value. Smooth brain translation, aka me, is add the total dollar amount of shares traded at the price the orders were executed at divided by the total number of shares traded over the 10-day period. I made up easy numbers to represent this formula. Thank you, sir. Clov has stated it will provide the fair market value once calculated no later than 1 day after August 5th. The relevance of the FMV price is that it determines the amount of shares that will be issued per warrant, ranging from a minimum of 0.249 to a maximum of 0.361. We covered the 0.361 stat yesterday, and this matters to us shareholders as the higher amount of shares that are issued per warrant means increased dilution of total shares, and this happens when warrants are converted. The company creates the shares in order to redeem the warrants. With that said, in order to reach the maximum amount of shares issued, that 0.361 number, the fair market value would have to be $18, more than double what the current price is. Regardless, the number of shares that will be added to the float will be between 9.462 and 13.718. Now we're getting into speculation. Clov did this to take control of the ship. This clears them of liability of having to deal with the warrants later on, and by forcing the cashless option on the public warrants, it shows they do not need the capital for operations that the cash option would have raised. Worst case scenario is this is good news long term. I think the most likely scenario we see pan out in the near term is that hedge funds tripling down on misinformation the warrants have caused and raise fear from retail investors by continuing to increase their short positions, manipulating the price with the goal of driving the price down so far that they can begin to cover. Based on today's movement, I think this is the direction they are headed. I personally don't think they will be successful. They are playing with fire. At any time there are catalysts that could trigger the same squeeze we experienced when the price shot up to 28, but this time it would reach higher highs. Wouldn't hedge funds just buy the warrants now to hedge their short positions? This is an interesting theory, as hedge funds could theoretically purchase warrants if enough are even available for this. There is a market where you can buy and sell warrants on the secondary market that has no direct effect on the current stock price and release some of the short pressure, raising the stock price and redeeming the warrants they purchased for a gain. This is very likely in his opinion, as the warrants they can purchase are public, which means they're forced into the cashless option at time of redemption, which means they could maximally receive 0.361 shares per warrant they purchase. So now we're going to get into a hypothetical. let's say, for example, a hedge fund was able to get a hold of 5 million warrants, depending on the price they purchase those warrants for. Currently $2.04 per warrant as I'm writing this. That's $10.2 million worth of warrants. And let's say the best case scenario happens and there is a fair market value of $18 in the next 10 days. They would receive 1.805 million shares on August 24th, and those shares would be worth what the price is on the 24th, not the actual fair market value determined by how many shares they would receive per warrant. This means their break-even price per share would have to be $5.65. And so we're going to do some more math here. 10.2 million invested in warrants divided by the number of shares received. Oh boy. That's not taking into consideration that their short positions are most likely worth way more than they could ever make up for by purchasing warrants now, or that if they let up on manipulating the stock, that it could trigger a squeeze and they would lose much more from their short positions than they would gain from their warrants. I think we can rule this out, but nonetheless pay attention to the price of warrants over the next 9 trading days. Fuck, my brain hurts. That's absolutely right. Summary here. Let's be clear, this may affect our dreams to a degree of a near-term short squeeze. I think all this does is prolong the inevitable on that front. We have no idea what management has up their sleeve, but the timing of everything aligning seems to be too purposeful to be coincidental. There are catalysts looming combined with moving up earnings and now the warrants. I can't say when, and don't let anyone fool you into thinking they can predict the exact date either, but as many have said before me, there is a timer on this bomb and it is fucking ticking. Yes. Oh, this was a very in-depth post. I will link it below so you can read the whole thing, and your brain will probably explode. That is just about all I can take on this, guys. So as always, please make sure you are subscribed to the channel for more updates on Cloverhealth, as well as other stocks and tokens we like. And I thank you guys so much for watching this far, and I will see you in the next video.